Hello my dear friends, welcome you all back again to the second part of the amendments video, and in this video we'll complete the balance amendments which are applicable for November 2020 exam. All set and done my dear friends, whether exam is getting postponed or not getting postponed, it is certain that exams will happen. So please make sure that you are on track and you keep working hard. Make sure that you don't miss the bus, you really work hard and make sure that you definitely come out with flying colors once you write the exam. So please keep a thought out of your mind that exams will happen, will not happen, whether exams will be conducted physically or will they conduct online, how is it going to happen, what is going to happen, all set and done. One thing is very clear, if not immediately, but definitely exams will happen. That's fundamental fact. If not immediately, but definitely exams will happen. So please come out of that mindset that what is going to happen, what is not going to happen. What is your duty, just fulfill that. Make sure that you focus on your preparation and completely learn the things perfectly and become perfect. That's your objective. Make sure that you follow that. That's most important than anything else. Clear friends? Done. So in the previous amendments lecture, that is amendments part 1, there we completed amendments up to the discussion of exemptions topic. Now we'll start with discussion about amendments from the topic of place of supply. From here onwards, we'll have few small amendments in every topic, but they are also very important. And as I clearly told you, amendments have got some very good weightage from an examination perspective, and there is high possibility that good number of marks will come in the exam from the amendments area, because amendments are one such thing which is obviously very important, because a new thing which has come up where definitely focus will be there by ICAI on the amendments. Clear? Let's start. Without any delay, let's proceed my dear friends. Come on. Place of supply. There are few interesting amendments in relation to the concept of place of supply. Let's discuss that. But before that, let me make you recollect some concept in place of supply. I hope you remember this, but still, as a matter of fact, as a matter of my duty, I'll revise once again. Come on. Friends, we all know the fact that the concept of place of supply is not dealt by CGST Act. Instead, the concept of place of supply is dealt by IGST Act. In fact, place of supply has got very much importance, because if the location of supplier and place of supply both are in same state or UT, we treat it as intrastate supply. However, if the location of supplier and place of supply are in different state, we treat it as interstate supply. And it is very important that we properly classify them. The reason being very clear that in case of intrastate supply, we charge CGST and SGST. And in case of interstate supply, we charge IGST. So it is very important that we properly classify the type of tax to be applied, that is based on type of supply, and that is clearly based on place of supply. So place of supply is an integral element in determining the type of tax. In this context, let me tell you guys, place of supply has got 4 interesting sections. Section 10, Section 11, Section 12, Section 13, and these 4 sections are, of course, they are sections of IGST Act. And Section 10 deals with place of supply in case of goods. 11 also deals with goods, but 11 talks about place of supply in case where goods are imported or exported outside India, imported into India or exported outside India. Next, Section 12 and 13 both talks about place of supply in case of services, but one big difference is there. Section 12 will come into picture for determination of place of supply of services in case where location of supplier and location of recipient both are in India. If supplier recipient both are in India, then Section 12 will apply. But if supplier or recipient, any one of them is outside India, then provisions of Section 12 will not apply, provisions of Section 13 will apply. So please keep in mind very clearly which section will apply in which circumstance. That clarity should be there with you for sure. Clear? Now, let's go forward. Now we are talking about place of supply of research and development services, that is R&D services related to pharmaceutical sector, and B2B maintenance, repair, overhaul services. Now see, We are talking about something known as section 1313. In fact, section 13 has got 13 subsection. 13.1 deals with the concept of section 13.1 says 13 will apply only when location of supplier or location of recipient is outside India. 13.2 is a general rule. 13.3 deals with performance based services and 13.4 deals with place of supply in case of immovable property. 13.5 deals with the concept of 13.5 deals with the concept of admission to event or organizing an event. 13.6 talks about 3, 4, 5 held in more than one state, held in more than one location, including taxable territory. 13.7 talks about 3, 4, 5 held in more than one state. 13.8 talks about transportation. 13.8 talks about banking and financial services, intermediary services, hiring of means of transport, including yacht, but excluding aircraft and vehicle up to a period of 1 month. Then 13.9 talks about transportation of goods. 13.10 talks about transportation of passenger. 13.11 talks about services on board a conveyance. 13.12 talks about order services. Finally, last one, 13.13 talks about some interesting language they use there, where they clearly specify that in case of certain notified services, place of supply will be the place of effective use and enjoyment of a service. Come on, friends. If you observe very clearly what they have specified, they have specified very clearly that place of supply in case of certain notified services shall be the place of effective use and enjoyment of a service. Now, question is all about what are those notified services? That is what we are trying to talk about. See now, in order to prevent double taxation or non-taxation of supply of any service, section 1313 of IGST Act empowers government to notify any service for which place of supply will be the place of effective use and enjoyment of a service. So what is the place of supply, friends? Place of supply will be the place of effective use and enjoyment of a service. So where the service is effectively used and enjoyed, that becomes the place of supply. Now in this context, what are notified? Let's see that. The following research and development services related to pharmaceutical sector have been notified as the services for which the place of supply shall be place of effective use and enjoyment of a service. Come on, let's look at that. What are covered here? Integrated discovery and development, evaluation of the efficacy of new chemical or biological entities in animal models of disease. Whenever they develop a new drug, they test it on animals to check whether the drug is properly working or not. Example, a drug related to coronavirus, something like that. Then evaluation of biological activity of novel chemical or biological entities in vitro assess. In vitro basically means outside the animal. You can see that. Drug metabolism and pharmacokinetics of new chemical entities. Safety assessment or toxicology, stability studies, bioequivalence and bioavailability studies, clinical trials, bioanalytical studies. Anyways, all these are research and development activities related to pharmaceutical sector. You need not remember all the definitions of this each and every research activity because you are not a science student, you are a commerce student. Need not worry, but what you should remember is research and development activities related to pharma sector have been notified for the purpose of section 1313. So what is the answer? Look at the last column. In relation to research and development services related to pharmaceutical sector as specified in column 2 and 3 from serial number 1 to serial number 10, place of supply shall be location of recipient of service. Wherever recipient is located, that becomes the place of supply. I repeat one more time, place of supply shall be location of the recipient of services subject to fulfillment of the following conditions. Number 1, supply of service from the taxable territory is provided as per the contract between service provider located in taxable territory and service recipient is located in non-taxable territory. So supplier is in India, recipient is outside India, And what is the nature of service? Nature of service is very clear. R&D services related to pharmaceutical sector. Second, such supply of services fulfills all other conditions in the definition of export of service except the condition that place of supply is outside India. Why they did not tell this point? Because here we are going to talk about place of supply only. So why they will again tell place of supply should be outside India? Here obviously you can observe the fact very clearly that they specified place of supply will be location of recipient, and of course location of recipient is outside India. And conditions given in export of service, for your knowledge, let me tell you friends, in section 2 clause 6 of IGST Act, they have clearly given in order to regard as export of service, supplier should be located in India, recipient should be located outside India, place of supply should be outside India, and payment should be received in convertible foreign exchange or in Indian rupees wherever permitted by RBI. Like this, clearly some conditions are given with relation to export of service. If those conditions are all satisfied, then done. In relation to research and development services related to pharmaceutical sector, place of supply will be the place of location of recipient. That's it. Interesting, small point but very powerful. Then, next interesting amendment, B2B maintenance. B2B means we know there is a small difference between B2B and B2C. B2B is business to business, B2C is business to consumer. For example, Shiva Teja is a registered person in GST law. If I go to a shop and take something, the transaction becomes B2B. Registered to registered becomes B2B. Registered to unregistered person will become B2C. Obviously, come on. B2B maintenance, repair and overhaul services have been notified as the services for which place of supply will be place of effective use. Place of what, my dear friends? Effective use and enjoyment of a service. Say now. Supply of maintenance, repair or overhaul services in respect of what? Aircraft engines and other aircraft components or parts supplied to a person for use in the course or furtherance of business. That is the reason they use the word B2B transaction. In that case, my dear friends, the place of supply of services shall be the location of recipient of service. Place of supply is what, my dear friends? Location of recipient of service. That's it. Next. Clarification regarding determination of place of supply in certain cases. In some interesting cases, they have given some clarifications. Let's look at what is those. Various services are being provided by port authorities to its client in relation to cargo handling. Friends, port authorities, for example, whenever we import some goods, I'm sure you know the procedure. Goods arrive at Indian Customs Station. Then person in charge files import manifest or import report with proper officer. Then proper officer grants entry inwards. Entry inwards concept is only in case of vessel. After that, goods are unloaded at approved places on working days during working hours under supervision of proper officer. And here one point to be observed is that once goods are unloaded, the goods are under control of custodian. That is, the port authorities will have control of that goods, and they are providing various services in relation to the cargo handling. Correct, right? Now, big question which came up is here, should you apply section 12.3? That means 12.3 is talking about immovable property. Should you apply immovable property section here? Answer is strictly speaking no, because it is not an immovable property service. See now, whether the place of supply of such services would be determined in terms of provisions contained in 12.2 or 13.2, that is general rule of IGST Act, as the case may be, or the same shall be determined in terms of 12.3 of IGST Act. 12.3 talks about immovable property. See here, it is hereby clarified that such services are ancillary to or related to cargo handling services. Cargo handling services, and are not related to immovable property. Accordingly, the place of supply of such services will be determined as per provisions of section 12.2 or 13.2. Why 12.2 or 13.2? 12.2 will apply when supplier recipient both are in India. 13.2 will apply when supplier or recipient one of them is outside India. Next bit. What would be the place of supply in case of supply of various services on unpolished diamonds, such as cutting and polishing activity, which have been temporarily imported into India and are not put to any use in India? See that in case of cutting and polishing activity on unpolished diamond, which are temporarily imported into India and are not put to any use in India, place of supply will be determined as per provisions contained in 13.2 of IGST Act. 13.2 is nothing but general rule. Getting clarity, friends? Because if you remember, 13.3 was talking about performance based services, which deals with the concept of if any goods are imported for the purpose of repairs and after repairs they are exported, there itself they are clearly given provisions of 13.3 will not apply. Then obviously we have to go back to general rule, that is nothing but 13.2. And what is the general rule answer? General rule answer is very clear. Place of supply will be location of recipient if it is available in the ordinary course of business. However, if the location of recipient is not available in the ordinary course of business, then place of supply will be location of supplier. Very, very interesting and important. Come on. Finally, last 1-2 clarifications. Let's discuss that also and close with place of supply. Clarification regarding determination of place of supply in case of software or design services related to electronics, semiconductor and design manufacturing industry. So what is the nature of service they are giving, sir? Software or design service is given which is related to electronics, semiconductor and design manufacturing industry. Come on. Listen here. I'll give an example. Kindly please concentrate. Listen. Just a second. Come on. Let's say for a second, there is one person known as Mr. A. And there is one semiconductor company. When I say semiconductor company, that's an entity which is engaged in manufacture of semiconductors. Now, what has happened is this entity will manufacture semiconductors. That is one thing. Yeah. Second possibility is that semiconductor company provides design or software related to semiconductor. That means they are not manufacturing semiconductors, but they are only giving a software or design for that semiconductor. And what happens is that along with that software or design, they also develop one prototype. I'm sure you would have heard this word prototype, but still let me tell you, my dear friends, prototype point is very clear. The meaning of prototype is that prototype is something like a design. Whatever design or software is given for a particular semiconductor, one model is developed. See, for example, whenever we talk about a construction company, they are constructing one apartment. So generally what they do is with wood or with some other plastic material or any material, they develop one design or a prototype just to display and showcase how will the apartment look after construction is over. Correct, right? That is known as prototype. Come on, now let's look at what clarification they have given. Come on, so let's look at the nature of clarification given. How should the place of supply be determined in case of supply of software or design services by a supplier located in taxable territory in India to a service recipient located in non-taxable territory? So supplier is in India, recipient is outside India. By using the sample hardware kits provided by service recipient has given some sample hardware kit. So using that, supplier has developed one software or design. See now, a number of companies that are a part of the growing electronic semiconductor and design manufacturing industry in India are engaged in the process of developing software and designing integrated circuits electronically for customers located overseas. So for foreign customers, they are developing some softwares and designs. Now look at this. These designs are communicated abroad in the industry standard electronic formats, either to the customer or on behest of the customer to a manufacturing facility for manufacture of hardware based on such designs as requested by the client or customer. In addition, the software developed is also integrated upon or customized to this hardware. So whatever software they develop, they'll customize it to the hardware. In some occasions, samples of such prototype hardware are then provided back to the Indian development and design companies to test and validate the software and design that has been developed to ensure that it is error free. So what is happening here is that, for example, Shivateja is in India, who is a design company. Okay, I have given design to one foreign entity, and that foreign entity has given me some hardware, and using that hardware I developed some software. And what has happened is that after that, that foreign entity has developed one prototype, one sample model, and they gave it back to me to check whether it is okay or not. Then it is clarified that place of supply of software or design by supplier located in taxable territory to service recipient located in non-taxable territory by using sample prototype hardware or test kits in a composite supply where such testing is an ancillary supply is the location of service recipient as per 13(2) of IGST Act. Provisions of 13(3)(a) do not apply separately for determining place of supply for ancillary supply in such cases. Ancillary supply is only the testing activity. The major activity is providing designs. Providing design and development of software is the major activity. The testing is only an ancillary activity. To put it in simple terms, my dear friends, for example, let's say there is Shivateja in India. There is one person known as Mr. Jack who is in Japan. Shivateja has given some design or software which is related to electronic semiconductor. Come on. Shivateja has given some design or software related to electronic semiconductor to Jack. After that, what has happened is that Jack has developed one prototype and given that prototype to Shivateja for the purpose of testing. In this context, they have clearly clarified that testing is only an ancillary supply. The main predominant supply is nothing but development of design or software. And when we are talking about the main activity is development of design or software, then provisions of section 13(2) will apply, but not 13(3), my dear friends. 13(3) will come into picture only in case of performance-based services. That is talking about where service is supplied in respect of some goods. Clear? But that should not apply here because here testing is only an ancillary supply. The major activity is only development of design or software. So this is the story of this amendment. In fact, not an amendment, but more of a clarificatory nature given by a circular. That's it. So these are the interesting amendments in the topic of place of supply. So friends, now let's look at the amendments in relation to the topic of value of supply. Come on. In this topic, there are few small amendments. Let's discuss that and complete this. So first, value of supply in case of lottery. And I'm sure you guys know that the concept of valuation in case of lottery is dealt by one beautiful rule known as Rule 31A. In fact, once upon a time, there was one small concept where they used to clarify that There are two types of lottery. One, lottery run by state government, other lottery authorized by state government. In fact, my dear friends, with respect to lottery, the power to levy tax is with state government only, not with central government. Clear? And one point to keep in mind is that after the inception of GST law, lottery betting gambling has got into GST law and GST is levied with respect to lottery betting gambling also. And what was the concept earlier was very clear and interesting. There were two types of lottery known as lottery run by state government, other one lottery authorized by state government. And let me also tell you what is the difference between these two. With respect to lottery run by state government, in case of lottery run by state government, tickets are sold only in the organizing state. In which state lottery is organized, in that state only the tickets are sold. But with respect to lottery authorized by state government, tickets are sold outside the organizing state also. That is a difference. And major point, my dear friends, we all know the fact that lottery business is way too high, especially in the state of Kerala. Clear? So lottery run by state government means the tickets are sold only in the organizing state. Whereas lottery authorized by state government means tickets are sold outside the organizing state also. Now here, one very interesting point what I'll tell you is that with respect to lottery run by state government, the value of supply was different. Lottery authorized by state government, value of supply was different. With respect to lottery run by state government, it was 100 by 112. That means technically the rate of GST was 12%. 100 by 112 of face value of ticket is what we used to do. But for lottery authorized by state government, it was 100 by 128 of the face value of ticket. That means technically the rate of GST was 28%. But let me tell you friends, they made an amendment in the law and they made both lottery run by state government, authorized by state government, both as 28% only. Now see, Rule 31A of CGST rules provide that value of supply in case of lottery. Earlier, separate valuation mechanism were provided for lottery run by state government and lottery authorized by state government. That's what I was talking with you. However, with effect from 1st March 2020, Sub-Rule 2 of Rule 31A has been amended to provide that value of supply of lottery will be higher of 100 by 128 of the face value of the ticket or 100 by 128 of the price notified in the official gazette by organizing state. These two, whichever is higher. So earlier there were a different valuation mechanism for lottery run by state government, lottery authorized by state government. But in both the cases, now the answer is very clear, 100 by 128 of the face value of the ticket or 100 by 128 of the price notified in the official gazette, whichever is higher, that becomes the value of supply with respect to lottery. Next. Clarification of issue of GST on airport levies. Already I discussed this concept with you. That is, airport authorities charge some amount known as user development fee or passenger service fee. They collect that amount from the passenger and they collect that amount through airline company. So technically airline company is acting as a pure agent. Already this concept I discussed with you. Airline would recover only the actual PSF and UDF and GST payable on such PSF and UDF by the airline operator. Airline operator, which will be excluded from value of supply made by airline to its passenger, because we have applied the concept of pure agent. Registered persons who are ultimate recipient of the airport services may take ITC of the GST paid on PSF and UDF on the basis of pure agent's invoice issued by airline to them. Already I covered this concept with you. In the chapter of supply itself, we discussed this concept of PSF and UDF. PSF applies for passenger service fee and user development fee. That's it. That is the story of amendments in relation to the concept of what? Value of supply. Now finally moving forward, very interesting amendments in relation to the topic of input tax credit. Now what is that? Listen, the first interesting amendment, listen my dear friends. Sir, for example, let's say there is one person known as Mr. Ramesh. Let's say Mr. Ramesh supplied goods to Mr. Suresh, correct? And let's say, for example, both of them are registered person. Now, whatever GST is charged, Suresh will avail ITC of GST. Yes or no, my dear friends? Yes. Now, for your clarity of thought, let me tell you, we have got one section known as section 16 subsection 2, which deals with the conditions to be satisfied in order to claim input tax credit. The first condition is recipient should have a tax paying document. Number 2, recipient must receive goods or services or both. Number 3, supplier must pay tax to government. Number 4, recipient must file return. Now here, one crazy point to be observed is that in Rule 36 sub Rule 4, one crazy concept they introduced, that is, we all know that Ramesh will file one return known as GSTR 1, which is nothing but statement of outward supply, and that details will auto-populate in GSTR 2A of Suresh. Friends, GSTR 2A form is something like Form 26AS. In income tax, we open Form 26AS to look at our TDS credit. Here also, in GST law, we have to look at Form GSTR 2A to look at our GST credit. That is very important point. Now here, one brilliant point which let me highlight to you, my dear friends, wherein they clarified that it is very important that whatever credit you are claiming, that should match with your GSTR 2A. For that matter, what they have given is that actual credit as per books is, let's say, 80, my dear friends. Now, credit reflecting into a is, let's say, 60, my dear friends. What is the credit as per books of Suresh? As per books of Suresh, credit reflecting is 80, but what is reflecting into a is only 60. Now, even though 80 credit is there in books, Suresh can avail credit only to the extent of 110% of 60. That is nothing but 66. That means even though credit available as per books is 80, Suresh can still avail credit of only 66. This is one of the beautiful point what you have to observe. Even though credit as per books is 80, my dear friends, he can still avail credit only to the extent of 66, my dear friends. That is 110% of credit reflecting in GSTR 2A. In fact, once upon a time, this concept was 120%, but subsequently they brought an amendment in the law and made that 120% as 110%. So, even though credit eligible by Suresh is 80, he can still take credit only to the extent of 110% of credit reflecting in GSTR 2A. That is nothing but 66. Come on, going back. With effect from 1/1/2020, Notification 75 by 2019 dated 26 December 2019 has amended the said sub-rule to reduce the percentage of ITC that can be availed on invoices not uploaded by suppliers in GSTR 1 from 20% to 10%. That's it. Sit down. Now take an example. ITC as per books is 2000, but as per 2A is 1500. So what is the extent of invoices not uploaded? 500. Eligible ITC is only 110% of 1500, that is 1650. So ITC to be reversed will be 350. So even though he is eligible for 2000, he will still take credit of only 1650. Read below. Hence, even though we have a tax invoice for a total amount of 2000, then also we cannot claim it completely as the vendors have not uploaded the GSTR 1. ITC of the same can be taken again when it gets reflected in GSTR 2A. Hence, ITC will be allowed only to the extent of 110% of total eligible ITC in case when the vendors have not uploaded their GSTR 1. So it is very important that practically recipients should follow up with suppliers to ensure that suppliers file GSTR 1 and recipient can happily claim input tax credit. Next. Couple of interesting clarifications. See now, the restriction is not imposed through the common portal. Practically, this 110% is not happening automatically. We should only calculate that 110% on our own and restrict ourselves. It is the responsibility of the taxpayer claiming the credit to avail ITC on self-assessment basis. Restriction shall be applied only on the invoices or debit note, details of which are required to be uploaded by supplier to be uploaded. ITC under Rule 36(4) shall be calculated on total eligible ITC from all suppliers against all supplies whose details have been uploaded by supplier. So restriction is not on supplier basis. For each supplier, we will not apply 110%. We will see total into 110%. That's what we will do. Next, calculation would be based only on those invoices on which ITC is available, and therefore invoices on which ITC is not available, that is nothing but block credit, would not be considered for calculation of 10%. Earlier it was 20, but now it became 10. Then, amount of ITC in respect of invoice or debit note whose details have not been uploaded shall not exceed 20%. Of course, now it is 10% of the eligible ITC in respect of invoice or debit note which have been uploaded by supplier as on which day you will see that 10%. That is important. As on due date of filing GSTR 1 by the supplier for the same tax period. Clear, friends? That is the reason why practically they brought one form known as GSTR 2B. This is a practical point for you. GSTR 2A is a very dynamic form which keeps on changing based on whenever suppliers keep uploading invoices, that figures keeps on changing. But 2B is not like that. 2B is basically a static form which will not change. Once 11th is over, for generally GSTR 1 due date as per law it is 10th of next month, but practically it is 11th of next month. Once 11th is over, this GSTR 2B will reflect the credit and that becomes static, that gets freezed. Whereas GSTR 2A is not like that. GSTR 2A is very dynamic and it keeps on changing. Clear? Come on. That's more for your knowledge. I'm sure we got now the clarity about 110% story. Then, restrictions on utilization of input tax credit, a new rule they brought, my dear friends, where they clearly told in some cases we will not allow you to utilize credit. What is that cases? Please see. It could be something like fake invoices, some wrong document is there. See now. New rule 86A has been inserted in CGST rules to empower the commissioner or an officer not below the rank of an assistant commissioner authorized by him to impose restrictions on utilization of ITC available in credit ledger if he has a reason to believe that ITC has been fraudulently availed or is ineligible. So if officer is of the opinion that ITC is fraudulently availed or that ITC is not eligible, then he can impose restrictions, my dear friends. When can that happen? See now. 1. ITC has been availed on the basis of tax invoices or valid documents issued by a non-existent supplier. Supplier is not there only. That means some fake document has been given, or by a person not conducting any business from registered place of business, or next possibility, without receipt of goods or services, or both. Finally, the tax in relation to which has not been paid to the government. Next. Second, registered person availing ITC has been found non-existent or not to be conducting any business from the registered place of business. Finally, last possibility, registered person availing ITC is not in possession of a tax invoice or a valid document. Without having a document, how can you avail input tax credit? That's not correct. Next, if the ITC is so availed, the restrictions can be imposed by not allowing such ITC to be used for discharging any liability under section 49 or not allowing refund of any unutilized amount of such ITC. Clear, friends? And very logical, very sensible point. And practically also, Shivateja, I have seen these cases where officer has told you cannot avail this ITC and impose restrictions. That's happening because there could be a lot of fake invoices which are moving in the market. See now, such restrictions can be imposed for a period up to 1 year from the date of imposing such restrictions. However, commissioner or officer authorized by him can withdraw such restriction if he is satisfied that conditions for imposing restrictions no longer exist. So generally they impose for 1 year, but before also they can withdraw. Next, third interesting amendment, in fact very interesting and important, high possibility that question will come. Amendment in Rule 43. So Rule 43 talks about availment of proportionate credit in case where capital goods are used both for taxable as well as exempt supplies. Now see. Listen. For example, let's say there is one person, Mr. A, registered person, and he is a manufacturer of taxable and exempt items. Sir, one thing is very clear, if output is taxable, input tax credit is allowed. But if output is exempt, it is an obvious fact that input tax credit is not allowed. If output is taxable, then ITC is allowed. But if output is exempt, then it is quite obvious that input tax credit is not allowed. But now the challenge is all about what will happen in case where we are using some inputs or we are using some capital goods for both taxable as well as exempted. In this scenario, we have got some rules known as Rule 42 and Rule 43. Rule 42 deals with apportionment in case of inputs, and Rule 43 deals with apportionment in case of capital goods. That means, for example, if Mr. A has purchased one machine and that machine is used by A for manufacture of both taxable as well as exempted items, then how do we apportion the credit? I'll explain you the concept. First, what was it originally? Where they told Mr. A can avail full ITC on capital goods, but every month for 60 months he should do a reversal. By 60 months, because under GST law, for every capital good, useful life is always deemed to be 5 years. 5 years is nothing but 60 months. Now let's say Mr. A procured capital goods for 10 lakhs, GST at 18%, which comes to 1,80,000. This first he will avail full ITC, correct or not? After that, what he will do? Every month, first he will calculate proportionate credit. What is proportionate credit? 1,80,000 divided by 60 months, which comes to 3,000. Clear, my dear friends? Now, credit to be reversed. Why reversed? Because already enjoyed. Credit to be reversed is equal to 3,000 into exempt turnover divided by total turnover. So basically we are trying to calculate for that month what is the credit attributable to exempt supply, and that credit we will reverse. That's what I am talking about. Clear, my dear friends? Now here one interesting concept, let me tell you here, sir. For example, let's say in 1 month there are no exempt supplies or there is no supply at all. Then we will look at the figures of this exempt turnover, total turnover for previous month. Clear? So don't worry. Don't get a doubt. What if 1 month there are no exempt supplies, or what if 1 month there is no supply at all? If 1 month exempt supply or supplies are not there, then in that case, my dear friends, we will look at what? We'll look at previous month figures. Clear? This concept is there before also. There now also. In this there is no amendment. In which case there is amendment, I'll discuss with you now. Listen. Listen carefully. Mr. X purchased a capital goods for 10 lakhs. GST at 18%. Used for 6 months only for exempt supplies and then for both. That means what? First 6 months he used that capital good only for the purpose of exempt supply, but after 6 months he used that capital good both for the purpose of exempt as well as taxable. Now in this particular scenario, what will happen? That's what we are talking. Now I'll divide this into two parts. Prior, after. When I say prior and after, prior to the amendment, after the amendment. What is the difference? Let me discuss. Prior to the amendment, what they have specified is that initially ITC is not allowed. Obviously, because when you are using for exempt supplies, how will you take ITC? No. Then, after 6 months, ITC of 1,80,000 minus 5% per quarter for 2 quarters, because we always reduce 5% per quarter or part thereof. 5% per quarter or part thereof. Here we have taken 2 quarters because it is used for 6 months. Correct? Now what will happen? 1,80,000, how much is gone? 10% is gone technically. What is the figure? 1,62,000. So now what will happen after this is that 1,62,000 is credited to electronic credit ledger. This fact is clear. Clear, my dear friends? Then what we will do is that we will say common credit is equal to 1,62,000. That we will say that is a common credit. Then credit for a month, we will take it as 1,62,000. Again law told divide by 60 months only. And in fact, we always found this concept as illogical. Why illogical? We found this concept because already 6 months is over. Then what is the sense of dividing it again by 60 months? Already 6 months life is over, boss. Now what is the balance useful life as per GST law? As per GST law, balance useful life is only 54 months. Then what is the sense and logic behind dividing again by 60 months? But that was the concept. The figure is coming to 2,700. Now, listen. Credit to be reversed is equal to 2,700 into exempt turnover divided by total turnover. So this was the concept what we have followed, but we always found this concept illogical for a simple fact and reason that we were not convinced with this concept because of the simple reason that dividing by 60 months was not okay with us, because when already 6 months life is over, the balance should only be 54 months. But when you divide again by 60 months, we seriously find this illogical. Clear, friends? Then what amendment they have done, let me tell you. First point, initially ITC is not allowed. That is the same point. Clear? Then 1,62,000 credit is taken to electronic credit ledger after 6 months. This is also same. This is also same. Clear? But one thing what they clearly told here is that common credit, for the purpose of calculating common credit, we will not take figure as 162, we will take figure as 1,80,000. Earlier we used to reduce 5% per quarter or part thereof for calculating common credit. But now they have clarified that don't take that way, please take common credit as 1,80,000. Whatever is the ineligible ITC 18,000 that you added to output tax liability. But for the sake of taking common credit, please take it as 1,80,000, so that your credit for a month will become 1,80,000 divided by 60 months, which comes to 3,000. And of course, credit to be reversed, we'll calculate it as 3,000 into exempt turnover divided by total turnover. That is a brilliant amendment what they have done. Clear, friends? Beautiful, interesting, simple, easy, but powerful. Going back, earlier, when capital goods were initially used for non-business purpose or exempt supplies, are subsequently used for exempt supply and or non-business purpose as well as taxable and zero rated supplies, then ITC credited to the credit ledger was how much? ITC minus 5% per quarter or part thereof. Now this point has been amended. Earlier, entire credit will be taken to credit ledger. That means we will take 1,80,000 to the credit ledger and ineligible credit, that is 18,000. So put it in different way for you to give more clarity here. What we'll do here is 1,80,000 is credited to credit ledger and 18,000 is added to output tax. Net effect is same, but treatment is different, and that treatment will have an impact on calculation of common credit. 180 minus 12,000, 18,000 is 162 only. But the point is all about the methodology got changed, and because of the change in methodology, net effect, the common credit will change. Going back now, amendment is what? Entire credit will be taken to credit ledger and ineligible credit attributable to period during which capital good was used for non-business purpose or making exempt supplies shall be computed at 5% per quarter or part thereof and added to output tax liability of the tax period in which credit on such capital goods is claimed. So earlier directly we used to take 162 credit, but now we are going to take credit as 180 and then 18,000 is added to output tax liability. Net impact is same, but that net impact will have an impact on calculation of common credit. Next, couple of more interesting clarifications. Input tax credit. Clarification in respect of apportionment of input tax credit in case of business reorganization. Under 18.3, that is we are talking about amalgamation, merger, demerger, something like that. See, small clarification. First, number one, I'm sure capital goods point is very clear for us. Very important, please. Next, for the purpose of apportionment of ITC pursuant to a demerger under Rule 41(1), value of assets of new units is to be taken at state level and not at all India level. For apportionment, we will take the ratio of assets that you take state wise, not all India level. Then, formula for apportionment of ITC shall be for all forms of business reorganization that results in partial transfer of business assets along with liabilities and not just demerger. Third clarification. The ratio of value of assets shall be applied to total amount of unutilized ITC, that is for CGST, SGST, IGST. You need not apply this formula separately for CG, SG, IG. You can combine that and apply the formula. Further, the set formula shall also be applicable for apportionment of cess, GST compensation cess between the transferor and transferee. Then, total amount of ITC to be transferred to the transferee should not exceed the amount of ITC to be transferred as determined in Rule 41. However, transferor shall be at liberty This is interesting. Transferor shall be at liberty to determine the amount to be transferred under each tax head within this total amount. So total amount to be transferred is 1 lakh. That 1 lakh you can transfer from CGST or SGST or IGST subject to the ITC balance available. Then apportionment formula shall be applied on the ITC balance of the transferor as available in credit ledger on the date of filing ITC 02. Sir, basically we are talking about transfer of ITC from demerged company to resulting company or any kind of partial demerger. Then, for the purpose of apportionment of ITC, ratio of value of assets should be taken as on appointed date of demerger as specified in respective scheme for demerger. So on that day we will take the ratio of value of assets. That's it. With this, my dear friends, we are done with the story of amendments in relation to input tax credit also. Some major task is over. Now few more small topics are left. They are very simple and easy. That also we'll talk and complete this discussion on amendments. Come on, next. Come on, my dear friends. Now let's look at the amendments in relation to the chapter of registration. Now there are few more small amendments in relation to few small topics which are left out. That also we'll discuss and close with this discussion on amendments. Come on, see now. So let's look at now the amendments in relation to the topic of registration. In this there are few small amendments which are very interesting. So kindly please look at that very carefully and understand them very clearly. Come on, exams are fast approaching, so don't waste your time. Just concentrate and focus. Come on. First amendment, very simple point. What is that? Bank account details may be furnished after obtaining registration certificate. In fact, my dear friends, once upon a time, it was very clearly mandatory to submit bank account details at the time of obtaining registration. But practically this became a very big issue because whenever a person is going to the bank for opening a bank account, bank is asking for a GST number, and when we go to the GST department for applying GST registration, they were asking bank account details. So technically there was a controversy going on between GST and the bank that one was dependent on another. That is the reason why practically they made an amendment in the law stating that we can directly apply for registration even without bank account details, but subsequently within 45 days we have to update our bank account details online. So at the time of obtaining registration, it's not necessary to have bank account number. See, while applying for registration on GST portal, a person is required to furnish details of his bank account. This requirement has now been relaxed to a limited extent by inserting a new rule 10A to CGST rules. In pursuance to the same, a registered person has an option to give his bank account details after obtaining registration. He can give the details after obtaining registration, but within 45 days from the date of grant of registration or the due date of furnishing return, whichever is earlier. That means initially he can obtain registration even without submitting bank account details, but he has to update that bank account number within 45 days from the date of grant of registration or the due date of furnishing return, whichever is earlier. Next, this relaxation is not available for those who have been granted registration as TDS deductor or collector or who have obtained suo motu registration. So for those who have obtained registration as a TDS deductor or TDS collector, and for those who have obtained suo motu registration, for this category of persons, this relaxation will not apply. So final outcome of this amendment is very clear that we can directly apply for registration even without giving bank account details, but it is our mandatory requirement that we have to update our bank account number within 45 days from the date of grant of registration or the due date of furnishing return, whichever is earlier. But this benefit or relaxation will not apply to a person applying for registration as TDS deducted or collector or have obtained registration suo motu basis. For this category of persons, this benefit will not apply. Next, manner of furnishing details of state or UT in an application for registration by a TDS director in a state or UT where he does not have physical presence. He is trying to obtain registration in a state where he does not have physical presence. Clear, friends? In that case, they gave a small clarification, something like this. When a person is applying for registration to deduct TDS in a state or UT does not have physical presence, he does not have physical place of business in that state, then he shall mention the name of the said state or UT in part A of the prescribed application form for registration. Further, the name of the state or UT in which his principal place of business is located is to be mentioned in part B. So in part A, part B, he can mention different state names. So part A, he will mention the state name where he does not have physical place of business. And in part B, he will mention the state where he has got principal place of business. A very small clarification given. Next. Meaning of not making taxable supply during suspension. Very interesting point. See that. Meaning of what? Not making taxable supply during suspension of registration clarified. Friends, first of all, what is the meaning of suspension? We know that there is one wonderful section known as section 29 which deals with the concept of cancellation or suspension of registration. When the cancellation proceedings are pending, where the cancellation is applied by the registered person or the cancellation is done suo motu by proper officer. In any category, when the cancellation proceedings are pending, during that interim period of cancellation proceedings, what will happen is that registration will be suspended. And it has been clearly clarified in the law that during the period of suspension, they cannot make any taxable supply. Now, when we are saying that they cannot make any taxable supply, that doesn't mean that they should not supply at all. Technically, the meaning of this word that they should not make taxable supply means that they can make a supply, but they cannot issue invoice and collect tax. They can supply, but they cannot issue invoice and collect the tax. That is the beauty what you have to observe. This is something like, if you remember, there is one concept known as effective date of registration. Whenever a person is liable to be registered, generally he has to apply for registration within 30 days. And if he applies for registration within 30 days, then the effective date of registration will be the date on which he is liable. And for supplies made between the effective date of registration and the date of certificate of registration, he can issue a revised invoice within 1 month. We learned this concept in registration topic. Similar to that. Clear? See now. An explanation has been inserted to this sub-rule 3 to rule 21A, clarifying that the expression shall not make any taxable supply shall mean that registered person shall not issue a tax invoice and accordingly not charge tax on supplies made by him during the period of suspension. That technically means that whenever we are using the word shall not make any taxable supply, that strictly doesn't mean that he will not supply. That means that he can supply, but he cannot issue invoice and collect the tax. Clear with this? See now, further, a new sub-rule 5 has been inserted in the said rule to provide that where any order having the effect of revocation of suspension of registration has been passed, provisions of 31(3)(a), what is that? Revised tax invoice. I sometime back told you that for supplies made between effective date of registration and the date of certificate of registration, they can give something known as revised invoice. Same concept here also. Revised tax invoice and section 40 first return in respect of supplies made during the period of suspension and the procedure specified therein shall apply. That's it. Simple concept. Then finally, next point, very practical point. Aadhaar authentication made mandatory for new registrants for grant of registration. Generally, we know that whenever a person applies for registration, within 7 days, the officer issues a notice and after that we reply. Once we reply, if he is satisfied within 7 days, he grants registration. But here, one crazy point you have to understand is that one newly introduced concept is that Aadhaar authentication has been made mandatory. For example, in case of partnership firm, all the partner details, and in case of company, the authorized signatory details. Individual, that individual Aadhaar authentication is mandatory. Now, what is Aadhaar authentication? One link will come to the registered mobile number, and with that, when we click a button, one OTP will come. When we enter that OTP, Aadhaar authentication is done. Now, by any chance where it might so happen that one particular person phone number is not linked to the Aadhaar, or name is different in PAN, name is different in Aadhaar. In these kind of scenarios, what they have given is very clear that whenever Aadhaar authentication is not done by a person, then proper officer will grant registration only after conducting physical verification of premises. So they'll conduct a physical verification, only then they'll grant registration. That is a crazy point what you have to observe. Very interesting, very powerful point. Come on. So this for every registered person, every individual, Karta, managing director, whole-time director, partners of firm, for all these persons, this concept of Aadhaar authentication is applicable. In fact, Shivateja being in practice, I myself, for a lot of clients in the recent past, for whom I have taken registration, I have done this Aadhaar authentication. Because if I don't do this Aadhaar authentication, then the officer will come and conduct physical verification, only then he will grant registration. You can see one line here. If they fail to undergo authentication of Aadhaar number, then the registration shall be granted only after physical verification of principal place of business. So without conducting physical verification, they will not give registration. So it is very important practically that if you want registration to be done without physical verification, then we are required to get Aadhaar authentication done. Come on, 1 2 small points then. Friends, if you remember, I already taught you that there are 3 categories of registration limits, especially 10 lakhs, 20 lakhs, 40 lakhs. 10 lakhs limit is applicable only for a special category state, Manipur, Mizoram, Nagaland, Tripura. But one special point is there that in case of Arunachal Pradesh, Meghalaya, Sikkim, Uttarakhand, Puducherry and Telangana, if you are engaged in supply of goods or supply of services or both, then the limit is 20 lakhs only. But in all other state, if you are engaged exclusively in supply of goods, then the limit is 40 lakhs. Exclusively in supply of services, the limit is 20 lakhs. If you are engaged in goods and services both, then also the limit is 20 lakhs. But 40 lakhs limit will apply only if you are engaged exclusively in supply of goods. And there I also taught you one point that 40 lakhs limit will not apply for some products such as pan masala, tobacco, ice cream and other edible ice. Correct? Now, here one special point we have, see that. Listen, one very interesting amendment. A new explanation has been inserted. A person shall be considered to be engaged exclusively in supply of goods, even if he is engaged in exempt supply of services provided by way of extending deposits, loans or advances, insofar as the consideration is by way of interest or discount. So generally, we know the concept that 40 lakhs limit will apply only if you are engaged exclusively in supply of goods. If you are engaged in supply of services, the limit is 20 lakhs. If you are engaged in goods and services both, then also the limit is 20 lakhs only. But here, one very special interesting amendment what they have brought is that when you are engaged in supply of goods, but if you are engaged exclusively in supply of goods, then only the limit is 40 lakhs. But now, one interesting clarification what they have given is that apart from goods, even though if you are engaged in exempt supply of services, where the activity is by way of extending deposits, loans or advances, where the consideration is interest or discount, then also they clarified that we'll apply the limit of 40 lakhs only. Listen. Let's take an example to understand this in a proper, better sense. Come on, see now. So let's say there is one person known as Mr. A, who is basically in, let's say, Andhra Pradesh. Okay? And he is a trader. Mr. A is basically a trader in laptops. then what will happen? Automatically, very clear, registration limit will become 40 lakhs. Now, Mr. A, apart from trading, come on, yes, Mr. A, apart from trading, let's assume for a second, he is also engaged in exempt supply of services by way of what? Let's say, apart from trading, he is also engaged in exempt supply of services. But what service? Exempt supply of services by way of what? Extending deposits, loans or advances where consideration is interest or discount. Even in that case, my dear friends, still the limit of 40 lakhs only will apply. Now here the beautiful point what you have to observe is that generally 40 lakhs limit will apply only if you are engaged exclusively in supply of goods. But here one beautiful clarification what they have given is that even if you are engaged in exempt supply of services by way of extending loans or advances where the consideration is interest or discount, still the limit of 40 lakhs will apply. That is what is the beautiful point what you have to observe, my dear friends. Very crazy point and fantastic important point. Next. So the concept what you have to understand here is very clear that in general, if you are engaged exclusively in supply of goods, other than that special states, the limit is 40 lakhs. If you are engaged in supply of services, the limit is 20 lakhs. If you are engaged in goods, services, both, then the limit is 20 lakhs. Here, one special point what they have clarified is that even though you are engaged exclusively in supply of goods, but apart from that, you are also engaged in exempt supply of services by way of extending deposits, loans or advances where the consideration is interest or discount. Still we will take the limit as 40 lakhs only. Just because you are doing that exempt service, we will not say that limit is 20 lakhs. Still we say that limit is 40 lakhs only. Because apart from trading activity, you are engaged in exempt supply of services by way of extending deposits, loans or advances where the consideration is interest or discount. That's it. With this, we are done with the story of this amendment and we are also done with the story of amendments related to the chapter of registration. Done. Next. Couple of small interesting amendments in relation to the topic of tax invoice, credit note, debit note. First small point. Special provisions relating to tax invoice for service by way of admission to exhibition of cinematograph films, movies in multiplex screens. So generally we know one special point what we learnt about 200 rupees where we discussed that if the value of supply is less than 200 and recipient is unregistered person and recipient does not want invoice, then supplier need not issue invoice to him. Instead, he can issue a consolidated invoice for all such supplies at the end of the day. Correct? But whenever we talk about movies, theaters and all, we generally pay a ticket price of 100 rupees, 150 rupees. Different prices are existing in different areas. Right? Now, this facility of not giving invoice has been removed with respect to movies. That means with respect to movies, issuing invoice becomes mandatory. And generally invoice is nothing but ticket. Whatever ticket they give, that is only deemed to be invoice. See now. Rule 46 has been amended to disallow this option to a supplier engaged in making supply of services by way of admission to cinematograph film in multiplex screens. That means even though it is less than 200, still they have to issue invoice. Moreover, the electronic ticket issued by them is deemed to be tax invoice, even if such ticket does not contain the details of recipient of service but contains the other information as mentioned under Rule 46. Moreover, supplier of such services in a screen other than multiplex screen has also been given an option to follow the above procedure. So in net effect, simple point here is that generally if the value is less than 200 and recipient is unregistered and does not want invoice, then supplier need not issue invoice. But here the amendment what they have done is that person supplying service by way of admission to exhibition of a cinematograph films in multiplex screens, they are definitely required to issue invoice even though the value of supply is less than 200. That is what is a beautiful point you have to observe here. Clear? Next. Manner of issuing e-invoice. This has been brought up recently. In October 2020, they brought this concept of e-invoicing concept where they told e-invoicing has been made mandatory, and wherein they also clarified that when we are applying this concept of e-invoicing is a concept where government has developed e-invoicing portals which is made mandatory as on today for those people whose turnover is more than 500 crores. What happens is that e-invoicing doesn't mean that on the government portal only will generate invoice. That's not the point. Whatever software you're using, use that software. You generate your invoices, and that invoice details we have to submit in the e-invoicing portal. And when we submit that details, what happens is that one number will be generated known as IRN, invoice reference number, along with QR code will come. So this invoice reference number we have to print on our invoice. So fundamental idea of government of this e-invoicing is basically to track complete movement of all kinds of supplies. The logic is very clear. Make sense? Then clarification in respect of goods sent or taken out of India for exhibition or on consignment basis for export promotion. Already I taught you this concept that whenever goods are taken outside India for exhibition, it is not regarded as supply because there is no consideration. And obviously, when goods are taken for exhibition, it is something like goods sent on approval basis. If some customer likes it, he'll buy. If a customer doesn't like it, what will happen? They'll bring it back. And we know the concept that in time of supply, and especially in tax invoice chapter, we learnt one interesting concept that in case of goods sent on approval basis, invoice must be issued at the time when supply takes place. Obviously, supply will take place when recipient accepts it. So very clearly what law told is that if the goods are sent on approval basis, invoice must be issued at the time when supply takes place or 6 months from the date of removal, whichever is earlier. That means if within 6 months the goods are not sold, still supplier must issue invoice and pay GST. Clear, right? See now? When the specified goods sent or taken out of India have neither been sold nor brought back either fully or partially within stipulated time of 6 months, what will happen then? Sender shall issue a tax invoice on the date of expiry of 6 months from the date of removal in respect of such quantity of specified goods which have neither been sold nor brought back. Then, one last amendments, that is about Finance Act 2019. See that. Government may on the recommendation of the council prescribe a class of registered person who shall provide prescribed modes of electronic payment to recipient of supply of goods or services or both made by him, and give an option to such recipient to make payment accordingly. These all concepts they are bringing only because to encourage online payments, digital India. That's a background story behind all these points. Then, accounts and records e-waybill. Validity of e-waybill. I'm sure we all know the concept of e-waybill, where we discussed that generally e-waybill, if it is up to 100 kilometers, it's valid for 1 day, and for every 100 kilometers of path thereof, 1 additional day. And with respect to over-dimensional cargo, what is over-dimensional cargo? Something like petrol tankers size, backside tanker size goes beyond the vehicle size. That's why it is called over-dimensional cargo. In that case, it's not 100 kilometer story, it is 20 kilometer story. Clear? See now. Up to 100 kilometers, the validity is 1 day. And this 1 day will apply in all cases other than over-dimensional cargo or multi-modal shipment, in which at least one leg involves transport by ship. Multi-modal shipment means 2-3 modes of transport are involved, and at least one leg involves transport by ship. Then for every 100 kilometers or part thereof, 1 additional day. So if it is 101 kilometers, you get 2 days time. 102 kilometers, still 2 days time. 199 kilometers, still 2 days time. 201 kilometers, 3 days time will come. And look at the third point, up to 20 kilometers, 1 day in case of over-dimensional cargo or multi-modal shipment in which at least one leg involves transport by ship. Since this over-dimensional cargo vehicles do not go so quick and fast, they give lesser time in terms of distance of kilometers I'm talking about. So up to 20 kilometers 1 day, and for every 20 kilometers of part thereof, 1 additional day will be granted. Clear? See now, please see one last point below. Subrule 10 has been further amended to lay down that validity of the e-way bill can be extended within 8 hours from the time of expiry. Validity of e-way bill, they can extend the validity within 8 hours from the time of its expiry. Clear? Very, very important point. Please keep this point in mind. One small multiple choice question can come in the exam. Next, restriction on furnishing of information in Part A of Form GST e-way bill 01. I hope you know that in e-way bill form there are two parts, Part A and Part B. Part A talks about the details of consignor, consignee, everybody, and Part B talks about the details of the vehicle. Now, one practical point very clearly, any person if he is not filing returns for 2 consecutive months, they are being blocked from generation of e-way bill. I've seen this practically. Couple of my clients were there because of lack of funds. They told we will not file return, and after a point of time, after 2 months, their e-way bill generation got blocked. So nobody was able to generate e-way bill on their name. Then that person came back to me again and told, sir, let's file the returns. So government has become very stringent on this point. See now, a person paying tax under composition has not furnished the statement for payment of self-assessed tax, that is nothing but GST CMP 08 for 2 consecutive quarters. Second point, very interesting. Person paying tax under regular scheme has not furnished returns, and return is nothing but GSTR 3B for 2 consecutive months. Or person paying tax under regular scheme has not furnished GSTR 1 for any 2 months or quarters as the case may be. However, Commissioner may, on receipt of an application from registered person in the prescribed form on sufficient cause being shown and for reasons recorded in writing by order in a prescribed form, allow furnishing of information in Part A of Form GST EWB 01 subject to the prescribed conditions and restriction. Then, an order rejecting said request shall not be passed. That means they can't reject without giving the said person an opportunity of being heard. And practically we say that it is the principle of natural justice to grant an opportunity of being heard. The permission granted or rejected by Commissioner of State Tax or Commissioner of UT Tax shall be deemed to be granted, or as the case may be rejected by the Commissioner. If State Tax Officer passes the order, it is deemed that Central Tax Officer also passed the order. Clear? Good. Then, payment of tax, small topic. Payment of tax you would have heard about section 49, 50, and of course 51 and 52, which was talking about TDS and TCS. We know that TDS is mandatory only when the contract value exceeds 2.5 lakhs, and practically at present applicable only to Department of Central Government, State Government, Public Sector Undertaking, local authorities, only to them it is applicable. Clear? See now. Amendments in Rule 87 of CGST rules prescribing provisions relating to electronic cash ledger. We know that online we have got electronic credit ledger, electronic cash ledger. Electronic credit ledger reflects the input tax credit, and the balance in electronic credit ledger can be used only for payment of output tax. But by any chance we want to pay any interest, penalty, late fees, or we are required to pay some tax under RCM, we should obviously use cash ledger. And how will money come into cash ledger? We have to create a challan and deposit the money in cash ledger. See now. Second proviso, which give an option to a person supplying OIDER services. OIDER, I'm sure we know that. Online Information Database Access and Retrieval Services. Practical example, Netflix, Amazon Prime. They store some data online which we can access and which we can retrieve from a place outside India to a non-taxable online recipient to generate challan through board's payment system. Like this, some concept was there, namely electronic accounting system in excise and service tax has been omitted. They removed that concept now. Then Subrule 9 provided that any amount deducted under section 51 TDS or collected under 52 TCS and claimed in GSTR 2 by the registered taxable person from whom the said amount was deducted or as the case may be collected shall be credited to his electronic cash ledger. But one thing what they have done is that the words, letters and figures in GSTR 2 have been omitted, obviously because practically we do not have GSTR 2. Of course, we have GSTR 2A in which we can see the credit based on opposite persons what GSTR 1 they filed. GSTR 2A is something like Form 26 AS. Next. Refund of tax that has been paid wrongly or in excess by utilizing ITC. Clear? That means what? For example, let's say we are required to pay some output tax of 80 rupees. Clear? Okay? Right. And we have got some input tax credit of 60 rupees. And 60 rupees is where? 60 rupees is there in electronic credit ledger. Now, when we have to pay output tax of 80 rupees, common sense point what we will do is using electronic cash ledger, we will pay 20 rupees. So, 80 rupees of output tax is being met, 60 rupees by credit ledger, 20 rupees by cash ledger. But tomorrow, subsequently, we realize that we were not required to pay that 80 rupees tax. It has been wrongly paid or paid excess. Then what will happen? Obviously, we'll apply for refund. Now, when we apply for refund, 60 rupees will come back to electronic credit ledger and 20 rupees will come back to electronic cash ledger. So, logic is very simple. Whatever amount you paid using credit ledger will come back to credit ledger. Whatever amount we paid using cash ledger will come back to cash ledger. That's all. See now, a new subrule 4A has been inserted in Rule 86 of CGST rules to provide that where a registered person has claimed refund of any tax that has been paid wrongly or in excess through electronic credit ledger, the said refund if found admissible, that means if it is allowed, it will be credited to electronic credit ledger. Obviously, because you paid output tax using credit ledger, now when you are applying for refund, that money will come back and sit in credit ledger only. That is a beautiful point what you have to observe here. Done. With that, we are done with the story of amendments up to the concept of payment of tax. Now let's look at amendment in the topic of returns. 2 small amendments. Number 1, person supplying order services not required to furnish annual return. What is annual return? We know that GSTR 9, which we are required to file annually, and generally the due date is 31st December. And reconciliation statement, I'm sure we know that is GSTR 9C, which is prepared by chartered accountant or cost accountant. Basis the matching annual return and also signed financials, he'll compare, and if any tax is required to be paid, he will make the person pay. Practically, that's what we keep doing. That's our job. And now here they have clarified that person engaged in order services, he is not required to file annual return and is not required to submit reconciliation statement. And that too, this concept is for those who are supplying order services from a place outside India. Next. Details of tax deducted and tax collected to be made available to the deductee and collectee respectively on the common portal after filing GSTR 7 and GSTR 8 respectively. Why GSTR 7 and 8? GSTR 7 is filed by that person who has done TDS, and GSTR 8 is filed by e-commerce operator who has collected tax at source. I'm sure we know that practically TCS concept is applicable only when some supplies are made through e-commerce operator. E-commerce operator collects this tax at source and the rate of TCS is 0.5 plus 0.5. Done. Next. Form GSTR 3B to be treated as return furnished under section 39. Once upon a time, originally when the GST law was framed, they introduced one form known as GSTR 3. But right from beginning, with effect from 1/7/2017, right from day one of GST, we never followed something known as GSTR 3. But right from last 3 years, we have been following form GSTR 3B. which is a summary return. So they made an amendment in the law very clearly clarifying that GSTR 3B is only the return but not GSTR 3. Why they brought this amendment? Because practically a lot of people started challenging, saying that GSTR 3 is a return but 3B is not a return. So in order to counter that challenge, they have clarified here very clearly by notification stating that GSTR 3B itself is the return under section 39. That's it. That is the story of amendments till the concept of returns. Now few small amendments that also will complete now. So friends, major part of amendments is done. Only few small points are left out. Let's complete that now. Come on. Friends, please do keep in mind that amendments has got very good weightage in the exam. There is a high possibility that good number of marks will come in the exam from these amendments. And especially being the fact very clear that May exams were not conducted and November exams will be conducted now, most likely, highly possible now. And in this given circumstances, since that both amendments were combined together, amendments of May 20, November 20, both I discussed with you. So both are those things what I'm discussing with you. So don't worry at all. See now. First, refunds. Couple of small interesting amendments, but important. See that first point. Proper officer to issue payment order instead of payment advice for refund. Once upon a time, proper officer used to issue payment advice. Whenever a refund was granted by proper officer, he used to issue payment advice. But now they replace that word payment advice with the word payment order. Just read that line once. Come on. Proper officer will now issue payment order instead of payment advice for refunds under GST with effect from 24th September 2019. Next point. Refunds allowed to retail outlets. Important concept. See that. Retail outlets established in the departure area of an international airport. So we're talking about an international airport where there is a passenger who is going from India to outside India. After the immigration counter, where we have an immigration counter in the airport, after immigration counter we have some retail stores. Now these retail stores are the stores where they procure the goods internally within India and they are supplying that goods to whom? To the international passenger. So technically, directly or indirectly, they are contributing for the purpose of exports. In that case, what law told is that whatever ITC they have, they can claim refund. Let's see that. Very interesting. Supply of goods by a retail outlet established in the departure area of an international airport beyond the immigration counters to an outgoing international tourist. To an outgoing international tourist is exempted from IGST. Very logical also, because it is something like exports. These retail outlets making tax-free supply of indigenous goods. What is indigenous? Indigenous is nothing but local goods to an outgoing international tourist are entitled to claim refund. This is very important. They can claim refund of the applicable GST paid on inward supply of such goods. Therefore, retail outlets which supply indigenous goods without collecting any taxes from the eligible passenger and may apply for refund. So they can happily apply for refund, guys. The refund shall be subject to the following conditions as specified in the newly inserted rule 95A of the CGST rules. Come on, what are the conditions? First one, inward supply of goods were received by the said retail outlet from a registered person, obviously against a tax invoice. Second, the said goods were supplied by the retail outlet to an international tourist against foreign exchange without charging any tax. This is important. Then, name and GSTIN of the retail outlet is mentioned in the tax invoice for the inward supply and such other conditions as may be specified are satisfied. Then, types of retail outlet, two types. Number one, duty-free shop. Second one, duty-paid shop. Duty-free shops are the point of sale for goods sourced from a warehouse licensed under 58A of Customs Act and duty-paid indigenous goods. So they have got two types of goods. One, which are local goods. Second, which are basically imported goods. That is also possible. Next, duty-paid shops are those which are retailing only duty-paid indigenous goods. Done. Next, this amendment is very interesting and very important. This is basically talking about your formula for refund. We know that refund formula is net ITC into turnover of zero rated supply of goods plus turnover of zero rated supply of services divided by adjusted total turnover. Correct, right? Now, basically, whenever we are making zero rated supplies, we can claim refund of ITC. Now, what is zero rated supply? We know that two types of transactions are covered in zero rated supply. One, exports. Second, supplies to SEZ. Only these two are covered in zero rated supply. Clear? Now, the amendment, what they have done is that turnover of zero rated supply of goods used in the above formula has been redefined. Has been what, my dear friends? They have redefined this formula to restrict the same to what? That is important. To restrict the same to 1.5 times. To restrict the same to what, sir? 1.5 times the value of like goods, similar goods domestically supplied by the same or similarly placed supplier or as declared by the supplier. So if the domestically similar goods are sold for 30 lakhs, then turnover of zero rated supply is restricted to 45 lakhs. By 45 lakhs, 1.5 times of value of like goods domestically supplied by the same or similarly placed supplier or as declared by the supplier. So if locally the similar kind of goods are sold for 30 lakhs, then turnover of zero rated supply should be restricted to 45 lakhs. They have brought this concept because a lot of people are overstating the value of export so as to claim more refund. So they have put a restriction stating that turnover of zero rated supply of goods is restricted to 1.5 times the value of like goods domestically supplied by the same or similarly placed supplier or as declared by the supplier. Then this point already we discussed, important amendment, and we already discussed this. Refund to be granted both in cash and credit based on original mode of payment. So whatever payment we made using credit ledger, when we apply refund, that amount will go to credit ledger. Whatever payment we made using cash ledger, that amount will go back to cash ledger. Already I discussed this point with you, sir. Clear? Then explanation to rule 9610. So this is basically talking about EOUs. See now, rule 9610 lays down an embargo. Embargo is something like a condition on the refund claimed by a person seeking refund of IGST paid on export of goods or services. Restriction is that such person should not have availed the benefit of exemption from IGST and compensation cess for goods imported by EOU or for goods imported under advance authorization or EPCG. Already when you have taken exemption under advance authorization EPCG, again how can you claim refund, boss? That's not correct. See now, an explanation has been inserted to this clause which clarifies that benefit of notification mentioned therein shall not be considered to have been availed. We will consider that you have not enjoyed the notifications only where the registered person has paid IGST and compensation cess on inputs and has availed exemption of only BCD. We really want you to pay IGST on imports. If not, we don't want to give you refund, because when you have not paid tax, how can you ask for refund? Question of refund will come only when you pay the tax. You pay the tax and then talk about refund. Without paying, how can you talk about refund, boss? Clear, right? See now. Next, recovery of refund of unutilized ITC or integrated tax paid on export of goods where export proceeds are not realized within stipulated time. So the logic of this point is very simple, that why government is giving refund of ITC when we are doing exports, because government wants to promote foreign currency. Basically they want foreign currency to come into India. But if the foreign currency itself is not coming to India, then what is the logic of giving exemptions then? That is where they put one important clause. See here. Sale proceeds in respect of such exports goods have not been realized. Then what will happen, my dear friends? Within the period allowed under FEMA, including any extension of such period, the person to whom refund has been made shall deposit the amount so refunded to the extent of non-realization of sale proceeds. So if the sale proceeds are not realized, whatever refund they enjoyed, that they should pay back to the government. Very crazy point. See now, the amount so refunded to the extent of non-realization of sale proceeds have to be deposited along with applicable interest within 30 days of the expiry of the set period, or as the case may be, the extended period. And then what will happen? In case of failure to do so, the amount refunded shall be recovered. Government will take away that as per provisions of 73 or 74. 73 deals with determination of tax not paid, short paid, ITC wrongly availed or utilized, or refund claim erroneously. If it is by reason other than fraud, misstatement, suppression, then section 73 will apply. If it is because of fraud, misstatement, suppression, then section 74 will apply. Section 73 or 74 of CGST Act, as the case may be, and is applicable for recovery of erroneous refund along with interest under section 50. However, where sale proceeds or any part thereof in respect of such export goods are not realized by the applicant within the period allowed under FEMA, but RBI, who my dear friends, RBI, very important point, RBI writes off the requirement of realization of sale proceeds on merits, the refund paid to the applicant shall not be recovered. That means RBI specified that it's okay, even though that money has not come to India, that's fine. Then what will happen? Refund whatever is given, they will not recover back that. Last line. Where the sale proceeds are realized by the applicant in full or part after the amount of refund has been recovered. That means government has, GST department has taken away the refund, whatever they have given. After that, whatever sale proceeds are there that are recovered, sale proceeds have come to India, then what will happen then? And the applicant produces evidence about realization within 3 months from the date of realization, then the amount so recovered shall be refunded by the proper officer to the applicant to the extent of realization of sale proceeds, provided the sale proceeds have been realized within such extended period as permitted by RBI. So logic is very simple. The fundamental idea of granting refund is that foreign currency should come to India, and if it is not coming to India within time, whatever refund they gave to us, they'll take back from us. And once that money comes to India, within 3 months we have to apply for that, and then again they'll give us refund. Such a brilliant point. Then, specialized agencies notified under 55, that is about United Nations, multilateral financial institutions. They're entitled to refund of IGST paid on what? Import of goods. Notified specialized agencies like United Nations or any international organization, they can claim refund of normal GST paid, and they can also claim refund of IGST paid on import of goods. Then, determination of refundable amount in case of refund of unutilized ITC on account of exports without payment of tax, supplies made to SCZ or SC developer without payment of tax, or accumulation due to inverted tax structure. I'm sure we all know what is inverted tax structure. Inverted tax structure is a case where your rate of tax on input is higher than the rate of tax on output. That is known as inverted tax structure. See now, in case of refund of unutilized ITC on account of exports without payment of tax, SCZ unit or developer, accumulation of ITC, common portals calculate refundable amount as least of the following. What is that? First formula, maximum refund as per formula. Second, balance in electronic credit ledger, obviously, of the applicant at the end of the tax period for which refund claim is being filed after the return in form 3B for the said period has been filed. And finally, last line, and the balance in credit ledger of the applicant at the time of filing refund. After calculating the least of the above three amounts as detailed above, equivalent amount is debited from electronic credit ledger of the applicant in the following order. So they specified some order for the purpose of granting refund. First, they'll grant refund of IGST. Then after that, they'll grant CGST, SGST equally to the extent of balance available. And in the event of shortfall in the balance available in a particular credit ledger, differential amount is to be debited from other credit ledger. What is the concept here? See, for example, let's say your refund is 10 lakhs. And you have got IGST credit balance of 6 lakh rupees, CGST also 6 lakhs, SGST also 6 lakhs. Then how will you get refund? Straight away, first 6 lakhs the refund will come from IGST. Then what is the balance refund you have to get? 4 lakhs. That 4 lakhs will come 2 lakhs from CGST, 2 lakhs from SGST. So for the purpose of claiming refund, they specified some order. First, IGST, then CGST, SGST equally to the extent of balance available. Not available, then other ledger, as simple as that. In fact, they brought this concept because similar concept is there even for utilization of credit ledger. We know that we have to utilize CGST, SGST credit balance only after IGST credit is fully exhausted. Without completely utilizing IGST credit, we can't use CGST, SGST credit. You would have heard this concept already. Exactly. Similar concept they brought here. Next. Bunching of refund claims across financial years permitted. Once upon a time, we were supposed to claim refund separately for every financial year. But now, they brought a concept where you can claim refund for different financial years at a time. See now. Earlier, there was a restriction on bunching of refund claims across financial year. Now the said restriction has also been relaxed. For instance, see that a registered person opting to file GSTR1 on quarterly basis can apply for refund on quarterly basis or clubbing successive quarters, and these quarters may be spread across different financial years. Once upon a time, we were supposed to claim refund for different financial years separately, but now they specified that you can claim refund at a time for all the financial years at a time. Then, refund of accumulated ITC on account of reduction in GST rate of goods not available. That means what? For example, Shivateja is a dealer in some goods. When I purchased the goods, the rate of GST was 18%. But subsequently, GST rate became 12%. So when I purchased, it was 18%. Now when I am selling, the rate became 12%. So obviously 6% credit might be left out, no sir. That 6% credit which is left out, I can't claim refund. Because this refund arised because of change in rate of GST or reduction in rate of GST. In those cases, refund is not allowed. See that. It is clarified that in such cases where input and output both are same, though attracting different tax rate at different points in time, are not eligible for refund under CGST Act. Thus, refund of accumulated ITC under said clause would not be applicable in cases where the input and output supplies are same. This point is beautiful. Next. Refund of ITC under 54(3) restricted to the extent of credit reflected in GSTR 2A. We can claim refund only to the extent of credit whatever is there in 2A, guys. So practically, lot of times persons claiming refund, they keep calling up the suppliers and tell them that please file GSTR1, please file GSTR1 so that credit will reflect in 2A. See that refund of accumulated ITC shall be restricted to the ITC as per those invoices, the details of which are uploaded by supplier in GSTR1 and are reflected in GSTR2A of the applicant. Then finally, some clarification with respect to refunds. Clarification in respect of certain challenges faced by registered persons. See, first case, an advance is received by supplier for a service contract, which subsequently got cancelled, and supplier has issued the invoice before supply of service and paid GST. Invoice is given. Whether he can claim refund of tax paid or is he required to adjust his tax liability in his returns. See here what clarification they have given. Obviously, you have to observe that first we give invoice, right? Then obviously, subsequently to reduce the tax, we give a document known as credit note. Credit note is a document given by supplier for the purpose of reduction of tax. See here, the tax liability shall be adjusted in the return subject to the conditions of 34. There is no need to file separate refund claim. However, in cases where there is no output tax liability against which credit note can be adjusted, registered person may proceed to file a claim under excess payment of tax, if any, through form GST RFD 01. This is a form practically what we use for the purpose of claiming refund. Next situation, same story but small difference. That is, here supplier issued receipt voucher for the advance. He has not given invoice. And when there is no invoice in picture, there is no question of credit note. There is no question of credit note. Here what will happen is that whenever refund is supposed to be given, he is required to issue a refund voucher. And then what will happen is taxpayer can apply for refund of GST paid on such advance by filing RFD 01 under a category refund of excess payment of tax. Credit note concept will not come because he has not given invoice. Here again invoice story is there, automatically credit note story will come. Whenever invoice is there, then to reduce the tax, the only document to be supposed to be given is nothing but credit note. That's it. With that, we are done with the major amendments in relation to the topic of what, my dear friends, refunds. Now, just few small points left out, that also will close now. Come on. Assessment and audit, standard operating procedure to be followed in case of non-filers of return. More from a knowledge perspective, possibility of question coming is very less. But this more of a knowledge point. Practically what is happening is that whenever registered persons are not filing returns, CBIC started some guidelines. CBIC issued some guidelines for the purpose of catching hold of these persons who are not filing the returns. First, what they are doing is that system generated message would be sent to all the persons 3 days before the due date to nudge them about the filing of return by due date, to basically to tell them that boss, get ready, due date is coming fast. So 3 days before they'll get the message. Then once the due date is over, system generated mail or message would be sent to all the defaulters immediately after the due date, to the effect that registered person has not furnished his return for the said tax period. The said mail or message is to be sent to the authorized signatory as well as proprietor, partner, director, karta. And after 5 days of due date of furnishing return, notice will be given. And once notice is given, they grant 15 days time. And one special point to be noted is that if within 15 days the registered person does not file the return, then the officer does something known as best judgment assessment. Very crazy point. And for the purpose of assessment of tax liability under 62, proper officer may take into account details of outward supply, inward supply, information from e-way bill, any other information whatever he has got. And finally, if the defaulter furnishes a valid return within 30 days of service of assessment order, that means once the best judgment assessment order is given, after that, if within 30 days all the returns are filed, then the order will be deemed to be withdrawn. Very interesting point. And if the said return remains unfurnished within the statutory period of 30 days from the service of assessment order, PO may initiate proceedings under 78 and recovery under 79. They'll start deducting money from bank account and straight away recover. Clear? Finally, last line. Based on facts available in some cases, commissioner may resort to provisional attachment. They'll attach the properties before issuance of assessment order. Further, PO would initiate action under 29 for cancellation of registration in case where returns has not been furnished for the period specified in 29. And let me tell you, in section 29 they have given that if returns are not filed continuously for 6 months, then PO can cancel the registration. Very interesting point. Then amendment in the topic of demands and recovery, only one small point. Tax interest and penalty payable to be intimated by PO before issuance of show cause notice. Before issuing show cause notice, he'll specify what is the tax interest penalty payable. PO shall, before serving such a notice, communicate the details of any tax interest penalty as ascertained by him in the prescribed form to the person chargeable with tax interest penalty under 73 or 74. So before issuing show cause notice, he will inform what is the tax interest and penalty payable. Then revisional authority under section 108. Revisional authority is the person or the officer who has got power to revise the orders passed by subordinate. Who can do that? Principal commissioner or commissioner for decisions or order passed by additional or joint commissioner. Additional or joint commissioner for decisions or orders passed by deputy commissioner, assistant commissioner, or superintendent. For orders passed by deputy, assistant, or superintendent, revisional authority is additional or joint commissioner. And if order itself is passed by additional joint commissioner, then the revisional authority is principal commissioner or commissioner. Then finally, miscellaneous provisions, few small amendments. That also will just talk for 2 minutes and complete this. Last few miscellaneous provisions, and these are more from a knowledge standpoint because miscellaneous provisions is one such topic which rarely keeps coming in the exam, but even though it comes rarely, we still can't take chance. So let me spend little bit time with you and discuss this also, because we have spent so much of time on discussing all the amendments. Part 1 already given to you. This is part 2 of the amendments, and with this we'll complete the amendments. So let me spend little bit time on miscellaneous also and close it, because by any chance, even if one multiple choice question come, that 1 mark will be worth it. So see that. Amendments in anti-profiteering provisions. I'm sure you guys know what is anti-profiteering. Anti-profiteering committee, there is one section known as 171 in the GST law, where they have specified in the law very clearly that any benefit arising on account of GST should definitely be passed on to the customer. Businessman cannot make profit out of GST. For example, if the rate of GST is 12%, and subsequently the rate of GST has become 5%, that 7% rate reduction should be passed on to the customer. Businessman cannot make profit of it. See that? First amendment. Time period of 2 months available with standing committee for examination of an application can be extended for a further period of 1 month. Whenever an application is received by the standing committee, originally they had got time limit for 2 months for examination of application, but now that period is extended for a further period of 1 month. Second amendment, screening committee. So standing committee is different, screening committee is different. Standing committee will actually forward the application to screening committee, which will just check that in detail. Screening committee to examine the issues of local nature and those forwarded by standing committee within 2 months. So within 2 months they will examine, which can be extended up to 1 month. Clear, my dear friends? I hope this point makes sense to everybody. I'll just read out that point. All applications from interested parties on issues of local nature as well as those forwarded by standing committee shall be first examined by state level screening committee, and the screening committee shall, within 2 months from the date of receipt of written application, upon being satisfied that supplier has contravened the provisions of 171 anti-profiteering, forward the application with its recommendation to the standing committee for further action. So when standing committee gives an application to screening committee, they will check, they will give their comments and give it back to the standing committee. Earlier, screening committee used to examine the applications on issues of local nature only, and there was no time limit for forwarding the application to standing committee. These points they brought it now. Then finally, time limit for completing investigation by DGAP, that is Director General of Anti-Profiteering, has been increased from 3 months to 6 months. Earlier, DGAP had to complete investigation within a period of 3 months of receipt of reference from standing committee. Now the said period has been extended to 6 months. Clear? Next. Therefore, now DGAP has to complete investigation within a period of 6 months of receipt of reference from standing committee, which is further extendable up to 3 months. Originally it was 3 months, but now it is extended to 6 months, which is further extended up to 3 months. Then, authority empowered to summon persons. In addition to DGAP and an officer authorized by him in this behalf, the authority has also been empowered to summon any person. Anti-profiteering authority we are talking about. Then, time limit for passing order by authority increased from 3 months to 6 months. See now, authority had to determine as to whether a registered person has passed on the benefit of reduction in the rate of tax on supply of goods or services, or the benefit of ITC to the recipient by way of commensurate reduction in prices within 3 months from the date of receipt of investigation report from DGAP. Whenever investigation report is received from Director General of Anti-Profiteering, after that Anti-Profiteering authority were earlier supposed to pass order within 3 months, but now that's extended to 6 months. Then, authority may seek clarification from DGAP on his report. Authority can now seek clarification from DGAP on the investigation report submitted by it during the process of determining as to whether the benefit of reduction in rate of tax or benefit of ITC has been passed on to the recipient by way of commensurate reduction in price. Then, profited amount to be deposited in consumer welfare fund along with interest. See now, an order to deposit an amount equivalent to 50% of the amount not passed on by way of commensurate reduction in prices in the consumer welfare fund of the center and remaining 50% in consumer welfare fund of the concerned state, where the eligible person does not claim return of the amount or is not identifiable. The rule has been amended to provide that amount shall now be deposited along with interest at the rate of 18% per annum from the date of collection of higher amount till the date of deposit of such amount. So whatever anti-profited amount is there, that amount should be deposited along with interest at the rate of 18% per annum. And the concerned state means the state or UT in respect of which the authority passes an order. Then investigation of matter other than those covered in the report of Director General of Anti-Profiteering. Here the small point is very clear that Anti-Profiteering Committee can investigate any other matters also which are not given in the report of DGAP. The authority has reasons to believe that there has been a contravention of provisions of section 171 in respect of goods and services other than those covered in the said report. It may, for reasons recorded in writing within a period of 6 months, direct the DGAP to cause investigation or inquiry with regard to such other goods or services. And such investigation or inquiry shall be deemed to be a new investigation or inquiry, and all provisions of Rule 129 shall mutatis mutandis. Mutatis mutandis means as it is, will apply to such investigation or inquiry. Finally, tenure of the authority extended from 2 years to 4 years. Originally, tenure of the authority was 2 years, but now they extended that to 4 years. Then, special procedure for corporate debtors undergoing corporate insolvency resolution process. CARP, we call it practically, under a code known as IBC, Insolvency Bankruptcy Code. Whenever a company goes for liquidation, we know that IBC law will come into picture, and then what will happen is that insolvency process will get triggered. And what happens is that there is one professional known as insolvency resolution professional or resolution professional who is appointed, and IRP or RP continues to run the business and the operation of the entity as a going concern and is responsible for compliance of all the laws till the insolvency proceeding is over and an order is passed by National Company Law Tribunal. Then the corporate debtor, that is nothing but the company which is undergoing insolvency resolution process, is to be treated as a distinct person of the corporate debtor and shall be liable to take a new registration in each state or UT where the corporate debtor was registered earlier within 30 days of the appointment of IRP or RP. And IRP RP will be liable to furnish returns, make payment of tax, and comply with all provisions of GST law during CARP period, that is corporate insolvency resolution process period. These points in miscellaneous provisions are more from knowledge standpoint, my dear friends, just to make sure that you guys have some good knowledge on this. Then, power of government to extend time limit in special circumstances. They just introduce one section in the law stating that whenever special circumstances there like floods, typhoon, hurricane, cyclone, earthquake or corona, for any reason like this, government can extend the due dates. We know that practically because of corona, a lot of due dates have been extended by the government. Then finally, 1-2 small points, my dear friends. National Anti-Profiteering Authority, what we were talking about, they have got power to impose penalty equal to 10% of the profited amount. Now they have got some power to impose penalty also, where the authority, after holding examination, comes to the conclusion that registered person has profited. Such person shall be liable to pay penalty equal to 10% of the amount profited, provided that no penalty shall be levied if the profited amount is deposited within 30 days of the date of passing of order by the authority. And profited shall be amount determined on account of not passing the benefit of reduction in rate of tax on supply of goods or services or both, or the benefit of ITC to the recipient by way of commensurate reduction in prices of the goods or services or both. That's it. With this, we are done with amendments in relation to the concept of miscellaneous provisions. And finally, last point, a new section 17A in IGST Act so as to bring into act provisions for transfer of amount between center and state consequential to amendment in section 49 of CGST Act allowing to transfer of an amount from one head to another head in cash ledger. If you remember this point, I taught you in already in amendments where I told you very clearly that whenever a person has got some balance in a major head or minor head in CGST, SGST or IGST, he can transfer that balance from one head to another head. Practically, they notified one form known as GST PMT 09. This is there practically, and I myself filed this form couple of days back, wherein I wanted to transfer balance from one head to another head, which is very much allowed. Clear? Done. That's it. With this, we are done with the story of amendments in relation to GST. And customs and FTP, they have not done much of amendments, just 1-2 points, that too more of clarificatory points, which we can see that and complete. See now. Clarification regarding applicability of notification on goods which were exported earlier for exhibition purpose or consignment basis. We know that goods are taken outside India for exhibition, and if something is not sold, they'll re-import that goods. Correct, right? Exactly. But see here one point, re-import of such goods after return from exhibition or from such consignees will be covered under residual entry of notification. That means you will not pay customs again, provided re-import happens before 6 months from the date of delivery challan. Because we know that if within 6 months the goods are not brought back, what will happen then? Then supplier must issue the invoice. We know that point very clearly, sir. Next, foreign trade policy, 1-2 points. Refund of drawback of BCD, we know drawback, section 74, section 75, 75A, 76 of Customs Act. We learn this concept. If imported goods are directly exported without use or after use, 74 will apply. Imported goods are used for manufacturing and then finished goods is exported, 75 will apply. 75A talks about interest on drawback, 76 talks about no drawback in certain cases. See now, earlier the refund of drawback in the form of BCD of inputs used in manufacture and supply under deemed exports category was given on brand rate basis. Brand rate means for a particular type of product, one rate was fixed. However, DGFT by notification has amended the provision and provided that refund of drawback on the inputs used in manufacture and supply under deemed exports category can be claimed on all industry rate. All industry rate means the rate is already fixed. Brand rate means we will go and approach the officer and get the rate fixed. Of duty drawback schedule notified by Department of Revenue from time to time, provided no SENVAT credit has been availed by supplier of goods on excisable items or on brand rate basis upon submission of documents evidencing actual payment of BCD. So earlier they were allowed to claim refund only under brand rate basis, but now they can claim refund under all industry rate also, even in case of deemed exports. Then import of goods as gifts prohibited except for life-saving drugs, medicines and Rakhi, exactly, but not gifts related to Rakhi. Rakhi is okay, but not Rakhi gifts. Earlier, import of gifts were free, where such goods were otherwise freely importable under ITC, Trade Classification Harmonized System. In other cases, such imports were permitted against an authorization issued by DGFT. Authorization means permission by Director General of Foreign Trade. However, DGFT by notification number 35 2015-2020 has amended the said provision provided that import of goods, including those purchased from e-commerce portals through post or courier, where customs clearance is sought as gifts, we want to take it as gifts, is prohibited. Prohibited means we can't do that except for life-saving drugs, medicines and Rakhi. Further, import of goods as gift with full payment of applicable duty is permissible. So pay full duty and you can then import. Then duration of applicability of FTP. We know that FTP comes every 5 years once. This was supposed to be closed by 31st March 2020, but because of corona effects, they have extended this by one more year up to 31st March 2021. Same logic, even all the schemes of advance authorization, EPCG, all the schemes under foreign trade policy, that also they extended up to 31st March 2021. Originally, this was supposed to be closed by 31st March 2020, but post-corona, they extended this for one more year up to 31st March 2021. That's it. With this, we are done with the story of all the important amendments which are applicable for November 2020 exam. And let me tell you, my dear friends, I have taken the best effort to ensure that all the amendments which are relevant for November 2020 exam are covered in detail, and make sure that you guys are completely perfect in this and get some amazing numbers in the exam. Friends, these are very important, so please don't take any chance at all. Please make sure that you definitely watch this video in detail and get some great clarity of thought on all the important amendments. With this, I'll close here. I'll sign off. Thank you so very much for all your time and effort. I'll not take much of your time. All the very, very best. Wish you all success. Do write really well and come out with flying colors. Any doubts, anytime, Shivateja is always there for your support. Just comment in the comment section. I'll reply back to your queries. And I'll come back with much more interesting videos. Thank you so much. Take care. Bye-bye. Thank you.